One of the most volatile periods of data is coming out. Not only do we have the CPI event, but earnings season kicks off this Friday with the big banks. So what's in store for us during the best period of the year, the first half of July? Well, as it turns out, markets continue to push higher on options positive gamma flow. In today's video, we see whether that's going to continue, and more importantly, we look for the opportunities together as investors and traders. Crypto's struggling, but it looks like there's some amazing breakouts in the metals and commodities markets. If inflation does spike, will these go absolutely bonkers? Join us as we cover stocks, commodities, and cryptos together in an amazing show. Let's get into it right now. Well, welcome back everybody to The Daily Show. My name's Tom. Today we're discussing everything from the macro to the data to the lead indicators that we need to be watching, but it was another session of incredible green and really good runs on some of the stocks we've been looking at breakouts this week on. We expected AMD to get higher, and it certainly did, but there are plenty of other opportunities on the horizon, and we'll be going through them in today's video. If it's your first time here, remember to subscribe and smash that bell icon. If you want to know more about Wall Street's dark pools, liquidity, and of course, positive and negative gamma flows. Let's begin with JP Morgan's game plan for CPI day. Now, I thought this was a pretty funny chart because as a lot of you pointed out over on X where we posted this, follow in the links in the description down below, 82.5% of their overall scenarios seem to be bullish for the markets. And generally speaking, it needs to be a pretty high CPI day, it looks like, for them to be really looking at it in any particular scared kind of fashion. Now, why is this important? Well, Goldman Sachs, of course, expects the CPI overall to be dropping. Most people are pricing in the idea that there's going to be a fall across the board. And it looks like shelter, which is something we've discussed for a while, is really still going to be the main kind of target. And I think a lot of people really overlook this one. We can see here the wisdom tree, real-time shelter versus BLS shelter, both actually have been ticking up in recent months. And while it's still floating underneath 2% here, you'll notice it's been there for quite some time. So realistically, I think shelter, wages, these types of ones are going to be the ones to watch. Whereas things like used cars, well, they are definitely dropping like a rock. It's clear that they were down over 10% in the last read. Generally, people think CPI is going to be pretty much flat to even down, and that is the general expectation. So of course, if it's anything different, it might end up being a very volatile session. Do be careful, and of course, look at some of the key levels we're bringing up later on today's show for potential opportunities. Often, big bits of news can bring with them some amazing quick hits to liquidity levels. So a lot of people are asking, the question, what if we get this, what if we get that in a presidential cycle? Well, I thought this was a great chart by Jurrien Timmer, and it basically just shows the kind of different percentage returns you usually expect. And of course, the fact that whoever wins, in general, the markets tend to go actually quite bullish over time. The general period you need to be most scared for is, of course, what we call the midterm cycle, which tends to be somewhere around year 2 into year 3. And as we know right now, we're in the 4th year, which tends to be very good, as does year 3. That tends to be where you get your largest gains. So everything will really be marked out. And of course, we'll be covering this later on this year. But at the moment, it looks like a lot of these economic figures, depending on which ones you're looking at, some of them are actually still in upturns. This is called the Global Wave Indicator from Bank of America. And you'll notice that it's been upticking for quite some time now. And this one's shared from Mark Zaccardi over on X as well, if you want to follow along there. You'll notice that sometimes it goes up for quite a long period of time. And if it does, then that can create quite large bullish cycles. You'll also notice that when it turns down negatively, very heavily, we're already in recession. So like any of these indicators, does this one really give you edge? I would say no, but it's kind of like this one here, which shows you that positions in US equities are at new, I think almost all-time highs. In fact, they're at decade highs. And this is asset managers plus leveraged funds. And on the surface of it, you might say, well, that's a hell of a lot of leverage. But I would also say you have to take into account that there is a hell of a lot of money out there. So because, of course, we had the printing press for so many years, a lot of that money escaped, in particular from governments and government spending, which of course causes inflation. Always remember, it's the governments that generally cause the inflation due to actually them printing the money or creating debt and that escaping into the system. This has caused more money to be out there, which means that you could expect this to actually be at all-time highs, if not way higher than that, and still potentially be okay for now. This is a chart where there are many different ways of looking at it, and maybe in the future we'll look at it in a different way so you guys can see that actually, while there is a lot of leverage in the markets, it's not quite at peaks when compared to previous times. Let's now have a look at all of the mega caps out there, the big ones that people care about this earnings season. The expectations, of course, at the moment are very, very big. And you can see that Nvidia is expected to do some big numbers. Meta also expected big things, and Amazon and Google a little bit less expectation across the board. But the AI5, or whatever people call them now, that's the new Mag 7, of course, it's really going to be very important. And then as we go through, yes, we're going to still have growth, but it's kind of, looking at a little bit slow down from that point. Now, if you actually break down Nvidia, a lot of people say we're in a bubble, everything's terrible, everything's scary. Yes, we are in a bubble when you look at the overall AI run. And of course, while you're in a bubble, do you expect it to crash? No, it's when people don't use the word bubble, you need to be more terrified, when they believe past the bubbling word. But really, Nvidia, as we've mentioned before, the forward PE is right on bang target. Basically, they've been living up to the expectation every single time they've got it. And effectively, that means that the forward PE has been running exactly the same rate. I think that's around 40 to 45 forward PE has pretty much been what this stock has traded at now for a very, very long time. So it's all about understanding what data stats you're really looking at. And of course, Nvidia being the most important stock at the moment is expected to basically see revenue growth slow. So it's not like Wall Street's sitting there saying, wow, we think what revenue is going to stay at 262%. They expect it to slow down. They understand that you can't just go from $1 trillion to $8 trillion business and push the percentages that high. And the consensus is dropping as we go through the third, fourth into 2025. So this is kind of what it needs to live up to. Do I think it could? I kind of feel like it can for a lot longer. The main reason is, if you remember, they had a massive show unveiling some of their products earlier in the year, and there were over $100 trillion of CEOs there. That's a lot. And you can imagine that every single one of them was trying to cut a deal with Nvidia, and that's led into, of course, further bullish momentum. But it also means there's only one game in town. That will eventually not be a concentrated risk. There will eventually be some other competition out there, and that will, of course, end up, dropping Nvidia's price. But for now, it's reigning supreme. Now, in terms of what's gone on so far, you can see that there are decent earnings already coming out. This one here is, of course, from FactSet, and you can see that, or Fundstrat, and you can see that they've already started to see beats coming through. Now, we will follow beats and misses as we go through this earnings season because, of course, we expect that financials should be beating, and generally I think the expectations are being met so that we can see a bunch of beats, and this could even drive markets higher. But I think it's going to be a very volatile time, and this earnings season is going to be wild. A story we mentioned last video was, of course, bankruptcies. You may see this chart going around. Don't worry about this yet. It's really the regional bank bankruptcies we need to be watching. And while there's a lot of them already happening, there is going to be a lot more. There are a lot of zombie companies out there that we'll need to pay attention to, I believe, in the back end of 24 into early 25. That's when we're going to start really looking at those. VIX seasonality, is it a good time for us to see some volatility and be day traders and swing traders? Well, frankly, yes, it is. Not only do we have CPI and earnings season kickoff, but we've also got the beginning of VIX seasonality generally and during election years. And I think this year is going to be, quite volatile coming into that election period. I also thought it was interesting because we've been talking a lot about oil, we've been talking a lot about metals in recent times. We're seeing BP raising forecasts for oil and gas demand as clean energy switch slows. And a lot of this is also because AI is very power hungry. And of course, it's leading into a huge amount of usage. So it's interesting the narrative is switching a little bit there, especially when it comes to the energy stocks. And that's something we'll look at post CPI because it could be very, very interesting what's going on in the energy stocks, especially with oil holding up over the last 24 hours. S&P 500 without a 1% decline. Again, we're sitting about 47 days at this stage, starting to get a little bit rare. And we've seen some amazing catch up for GDX. Now, we do like our gold on this channel. And of course, I've been talking a lot about 3K now for about 6 months, maybe even 8 months, and it's been doing very, very nicely. Now, gold stocks in particular, they've got to play catch up to gold price. And you'll notice they used to be synergized very well together. That disconnected in 23 and 24. Well, it looks like it's starting to come back and get closer and closer and closer. So gold stocks still playing catch up, doing better than gold spot this week, but both were nice. Prime book, that's also moving. It looks like we're getting a little bit of larger players starting to go back into materials and energy. Again, post CPI, that will be the report we're watching. And this week kicks off big earnings. We kind of expect most of the airplane companies to do very, very nicely. And of course, we expect banks to be lending lots of debt. And in general, they'll be lending debt at high rates and usually paying us, the retail investors, nothing in our banking account. Now, I know in the US in particular, a lot of those accounts are only paying 0.5%. And it's amazing anyone would leave them in there. But if you are watching this, go check out your savings account because there might be a lot of money in that that's earning no interest. Maybe you could do better. Let's move over now to the 2-week stretch of the year. Always keep a copy of this particular chart. Take a screenshot of it. Why? We know the first half of July is the best 2-week stretch. It's lived up to that expectation. It's gone absolutely bonkers. First half of Jan and first half of Feb also well worth keeping in the book along with some of these others. But just remember, these are the weakest ones. These are the strongest ones. I particularly like those because you know what? They are outliers in a good way if you're a bull on markets. You see price action like we did last Monday. Boom, switch to the bull end. We thought 5,600, 5,610. This market's gone 5,630 before the CPI. I would have said 5,600, 5,610. But anyway, it's continued up then. That gives you a great bias with some data. Speaking of data, secular bull markets continue to be, really the discussion here. And a lot of people are looking for epic pullbacks. There is a good chance that we may get a 10% pullback later on. As you can see here, this one ended up being the equivalent of 25. But I'd expect something in here to be volatile. Between 8 and 10 is normal. And you always usually get 2 pullbacks a year. So far, we've had 1. So you usually get a second one, and in most times, they are by the dip scenarios. And I think this year is probably not much difference. Let's run the 5-dayer now, and the 5-day rotation has been interesting, to say the least. We've seen a pickup in clean energy and solar coming out of nowhere after taking new lows. Maybe we'll need to watch that on our weekend video. And gold stock, number 1. So it's even beating semiconductors. Very nice to see it out there. You'll notice that energy stocks have been behind. Now, they're lagging. They could come back into the forefront. It really depends on the next 24 hours. Last 24 hours, though, of trade, gold stocks again, number 1, pretty much everything across the board up. And it was a very strong day in the market. So let's take a look at that. We get a net delta, of course, positive action towards the markets. And when we look at the weekly, this is the trading view indicator that's kind of interesting. You'll notice that net delta is running at about where you would expect, a bit weaker than maybe last week's overall. So CPI will have a lot to do with this. And as we've long suggested, we kind of thought that we might get a 2-week long stretch here, followed by some weakness. Now, the reason why is because we're starting to see some signs, and that's a sign that basically a lot of indicators overbought starting to appear. Now, generally when we get this, we either kind of go down straight away for a little bit, or we have a 2-week stretch, which we've talked about in several videos, which goes bullish, and then we get turns. Now, of course, we knew that 5,600 was very, very likely. It's a close on the high, which generally suggests that there is more to come on the daily. And you'll notice here that there is really no sign of weakness yet. So it's just market up, 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 up. And it is frustrating some people, but really, if you haven't really been looking at longs, especially even just last week on the Monday close, or in general being in sectors and rotations, shorting this market, as we've kind of seen many, many times, hasn't really been worthwhile for quite some time. Maybe in 22, even in 21, even in 23, at certain periods, it's worthwhile. But you're looking for that third quarter volatility to come in, and hopefully we'll be able to find it. We've seen PCC, we've seen a few other things start to show a little bit of negativity. Now we must look for the catalyst, the price action. Price breaks, very, very important. So the market keeps running higher. 5630 just basically pushes us to 1-day expected moves of 5670 or 5600. We know that the last level low is 5577. So you can mark that out if you're a day trader. And basically there's not really an easy trade here on the US 500 post CPI. Generally speaking, you'll be coming into either a really key level of demand or support, and then you'll be able to bounce off that level, or you'll hit a resistance and then see weakness, which will then break structure on the downside. Here, we're in the middle of nowhere land. So I think it's going to be individual sectors and in particular different instruments that we'll need to be watching. We'll check those out in a moment. Let's move over to the S&P 500 positive gamma shift, and it is very positive. Look at all these calls for the 11th. Look at all these calls for the 12th. I mean, it is a positive gamma fest, and you can see it's just green, green, green everywhere. 55.50 is where the first level of put wall is. So maybe there's some kind of weird structure that could appear there during the post-CPI result. But in general, this market is trying now to push towards 56.75 in particular. You'll see call resistance 56.75, 56.50, but also still heaps of calls on 56.75. So it looks like the market still wants to go bullish. We'll see whether JP Morgan's game plan of pretty much just positivity comes through. We also saw the CTAs start to increase positioning on S&P and also NASDAQ, and that has been, of course, built into price as well. Let's now take a look at Brent. Now, you may notice that because this is all 1 day delayed, you'll see that the CTAs have dropped Brent, but I expect that to uptick over the next read we get because, of course, we saw a little bit of price action bulling coming through here. And we'll look at this more on the chart soon because it's a good first sign that buyers could be there. Copper, still very bullish across the board. Gold, still very bullish across the board. And I thought we'd include AMD because it actually hit our target. And as you know, I'm huge on bringing options levels, and we always do this together, options levels with supply and demand, with positive and negative gamma kind of concepts to get to find out where markets are moving to next. And we had that price target of 182.50 for AMD. Now that's a first TP zone. I'll show you the second one later on. But basically, this is moving into super positive gamming territory as well now. As we trade above 184 or around there, we are sitting right above a lot of strikes. If the market stays bullish this week, guess what? Dealer hedging will most likely be offside, and coming into Friday, that could create a squeezing event. So AMD actually could still be on the run, similar to what we've seen with Tesla as well. Now, NVIDIA, that broke through 132, which of course is a huge strike. So depending post-CPI, if the markets start driving higher, guess what? A lot of dealer hedging may need to be done because you can see all the calls here, and maybe we push into the next narrative. 140, of course, the next major resistance target for NVIDIA. And I've got to say, I didn't really expect it to push through 132 so easily in this case. But hey, as I said, I wouldn't short NVIDIA, I wouldn't short semiconductors. I'd be long them as investments and big long positions, and I'd be looking for dips to get into them during what is this AI bubble. Let's move over to Tesla. Very, very strong gamma flow again, very strong bullish action. We closed above 257, which was a big deal. Weekly close will be important now to see whether we can drive to a 300, and you'll see that the current metrics seem to be between 275 and 280 for where the market wants to go to next, which just so happens to be the next major key take profit. And then, of course, after that is 300. So still very positive. And as we shared in our previous video, I'll put in the links at the end of this one, you'll be able to see a stat that actually says that Tesla, when it has a 9-day run up like it did, although we have limited data, actually ends up having an 18% further run over the next 21 days. So still looks quite positive across the board. S&P 500 versus central banks. You'll see central bank liquidity is remaining stable. Put call ratio, which is something we looked at earlier this week, upticked a little bit, so it didn't come underneath our 0.77 ratio. We're looking for that to be contrarian indicator along with price action. It's just not happening yet. And of course, home construction actually upticked. So good to see home construction finding some strength. If that, of course, does keep weakening, we see one of these outlier sectors just doing terribly, that is a huge warning sign for us to say, whoa, 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 we are super late cycle and a huge crash could be just around the corner. Now, are we seeing those signs yet? No. Let's move over to the US dollar. Nothing much here. I'll report back after inflation. I think we need to talk about it then. Copper found the base that we thought it would in terms of the key level, found a bit of a buyer, and then pulled back. Now, actually, there were probably buyers around 458, which makes sense. Nice structural creation. I'd like to see copper smash 465, close above, and then hopefully be on its merry way to the upside. Gold, very, very similar trade as it's kind of doing the same thing. Gold actually broke through the 2380 zone and then pulled back a bit as we suspected, and now it's trying to bull back up. And of course, first target on gold should be about 24.20, and I'm looking for a new all-time high. That would be kind of what we're looking at. GDX stock, as we suspected, is doing better. So GDX stock actually putting in another great day, 2.6%. It's been very, very bullish in recent times, and it looks like it's trying to go towards 40 at minimum, which should price in kind of equivalent to what we just mentioned on gold spot. What about US oil though? Well, this is why we have these key levels. Watch reaction here for bulls. You actually saw day trades come in throughout the session, and you'll notice it smacked that line and absolutely found initial interest. So we actually got a couple of interesting little trades in here. You could have, of course, bought these lows, bought the dip, put stop losses below the low, and you'd be up probably a 2-to-1 at the moment. But we also broke through 82.50 a barrel. So it's suggesting that maybe post CPI, maybe we get something like this. That would be pretty cool. If that happened, of course, very, very bullish oil. In particular, I'd be looking at energy stocks. Maybe we'll check them out after CPI, as they could be very, very nice. But this market is been making a series of lower highs and lower lows. That's now shifted. It all comes before inflation, which is strange in itself because usually it waits for those particular results. And maybe it's a trap, but very strong action. Love the wicks, love the level. Of course, a break underneath 80.50, bear all day. It would be really bad for oil traders. This is the most important level that we've found in a while for oil. And at the moment, it looks like it's trying to maybe tweezer and bull on the way up. I'm very interested in checking that out together after CPI. Let's now move over to Tesla. Still bullish, guys. We know our take profit zone, 274.21. As we mentioned before, we had that 275, 280 kind of level for options. So that's why this is also a key level. And of course, when it breaks through that zone, if it does, which statistics would say it probably will, then it could even go to 300. I actually wonder, let's have a look here. So this was day 9. Yeah, so it's actually 20% above, as we know the average is 18. Interesting. So it's kind of actually even making sense to its normal stats. AMD smashed through that 183, 182.50 target and kind of hit and closed on that zone. To me, this is an initial TP. If it does keep going strong, big weekly closure, CPI is good, everything looks fantastic for the market, this thing might be going to 207. So as an up run, you know, it could be going quite bonkers, another 13% on this particular stock. And it's kind of similar with Intel as well. They're all finding beautiful resistances right before the CPI. And Intel and AMD, they were really good replications. We found them early. They've been running nice runs and, of course, good momentum breakout. Something that's been sitting for a while, but eventually did break out. Now, this is where interesting things are happening. We've got overbought metrics across the board on semiconductors, and this is a good combo, semiconductors versus SPY, and it smashed through the 61.8 fib. You'll notice here, we got very good strength coming off this. Now, it doesn't really change my mind that I think we're in kind of a holding pattern for semis for maybe 1 to 3 months. It's just that period of time you usually see this. But that being said, very strong on semis, very strong on NVIDIA. And of course, we find ourselves targeting 140 now if we continue to hold up post CPI. Because if this doesn't find initial weakness, 140 is the target. Let's move over now to the Chinese market, which has started to improve a little bit as well last 24 hours. We get Tencent finding some nice bulls here, not quite breaking through our alert, but this is obviously our catalyst stock. And HSI finding the 61.8 fib, rejecting initially, and now going for the bull. I think this close is super important. We will revisit HSI in the next video. I'm excited to do that. Qs, big jump, obviously still running. Every metric you can think of is kind of showing overbought, but in terms of indicators. But that being said, you always follow price action. And as we always knew, the first half of the July month tends to be relatively bullish. So for now, unless CPI, and I doubt the earnings kickoff will stop it, we're looking more to next week to find out if we get any structure that shows that. Still bullish, still above moving averages, not even that far away from mean reversion at this stage. Now let's move over to the SIC market. It's crypto, and it continues to struggle. Now I posted over on X, are we seeing a breakout yesterday? And I hope somebody put in the comments, we need to see the close, because of course, yeah, that's what I was fishing for. If you don't get a close above a key zone, you're very unlikely that you've properly broken it out. It's more of a guess at that point. And that's what we saw. So we basically have Ethereum here coming into supply, finding weakness, it's straight away, and it's basically just kind of selling off that level. And Bitcoin as well, selling off that first bull turn. So when we scroll down, that's a pretty bad daily, by the way. You can see here that it found exactly where we first find the bull turn, and look at that, absolutely nothing above it. And what that means is that you found a great level. So well done, everyone. That's the kind of thing that you want to be finding. Great level, respects it, like the oil level that we found as well together. These kind of zones, or even HSI, it's getting respect off it. That's the type of thing you want to do. You pinpoint key levels using higher timeframes, activate trades on smaller timeframes, or even positions or investments. And that's, most of the battle. The key is having the patience to see the reaction of those zones and not necessarily predict them. You predict areas of interest, but then you want to see reactions. And that is why we have that slogan on every single one of our vids. So for now, crypto still remains bearish and still a series of lower lows and lower highs. Certainly no swing turn until at this point 64K. And if you were a bear, you'd still be targeting 52 to 51.5. So that's pretty much where we're watching. Now, what's ahead? Friday's PPI, Thursday's CPI. The expectation is 0.1% on the CPI, 0.2 on the core, and we'll find out whether it's higher or lower. If it is lower, maybe that's good for markets. Of course, JP Morgan seemed to think so. I always go with what's the price action telling us? Currently, it's bullish. We need to see something change that to really change our opinion from being bullish. So we will continue to watch, and especially metals and oil commodities. That's the one we're going to be looking at the closest. If you enjoyed today's video, remember to subscribe. Check out some of our other videos, especially on those Tesla stats in our last one. And of course, follow along on X or anything else. If you want to find out more about how to replicate certain trades, you can also check out some of our courses over at fxevolution.com. Thanks so much, guys. We'll see you in the next one. Bye for now.